All right, good afternoon, everybody. Welcome to the Bookmap Trading Tips and Tricks webinar. So we've been hosting this all week. Well, this is the third time Tricks webinar, and we're going to have the Bookmap Academy meeting tomorrow. But this is originally we set this up to do during the crypto competition. So that people can ask questions and we can go through more about trading. And then the first day we had Scott Pulcini come on just by chance, and we kind of turned this into something a lot more now. And very fortunate to have Robert Rother with us today. He's a professional trader. He's been trading for quite a long time at a very, very high level. So he's going to go through, he trades from the Bookmap chart and he loves it. So he's going to go through his tips and tricks that he uses when he trades from the Bookmap chart. So let me go through the disclosure and a few other items, and then we'll kick this off here. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so here's the crypto competition that we're co-hosting with Tino at Traders Reality. It's too late to join, but we can hopefully you guys are involved in it. It's been really quite a wild ride. You can go check it out here at competition.bookmap.com and scroll down. So you'll see all the prizes and the rules, etc. But it's the leaderboard here. There have been some really big swings in here. It's been kind of fun because we gave people a lot of leverage. So you can go in with, like, I don't know, 150 coins at a time, or more. And if you hit it, boy, you're gonna knock it out of the park. If you don't, boy, you're gonna get hurt. But you can always try to get in with more. Anyway, check it out. That was it will end tomorrow at midnight, so UTC time. And then we also have our Blue Jacket competition that started just the other day. This is ongoing, so you can join at any time, and you can use your phone for the QR code here, or go to bookmap.com/bluejacket. This is a competition based on your content, and a special note on this: it's trading content. That's why we're hosting these webinars on trading. We have these new trading journals and these new products, and so we're going to give you twice the credit in this competition here if your content shows trading. Right? It's the same with the Bookmap Academy that you might have heard about as well. It's a program for mentoring and coaching, and get twice the credit if you show your trades from the Bookmap chart. And we've got Robert Rother here to show you exactly how to do that. Okay. Then this is one of the webinars that we just had last week, and I want to show you something here. Because all of these webinars here are in a new playlist, and this one as well with Robert. If we go here, is the tips and tricks, our trading tips and tricks playlist in here. And we have one from Rob, Bookmap Academy member, and how he used the replay mode. Now, we also had before that, like a month before or so, Carmine Rosado. He went through how he uses the replay mode to debrief his trading in here. And then we've gone through a few more in here as well. So it's a great tool, and you don't have to have a live account or anything like that, but you can replay your trades or trade from replay mode, and then rewind it again and trade it again, so that you will get better quicker. All right, so check out some of those, and I'll put that link into the chat. And other than that, though, let's turn it over to Robert, and let him go through his presentation here.
Yes, hello, welcome. My name is Rother. Basically, every Thursday at 3 p.m. Central European Time, I'm giving live streams on the Bookmap channel, which is 9 a.m. Eastern Time. And today I want to give you a brief introduction of how am I using Bookmap, especially for trading, and also what is my understanding of the market, how I'm actually placing trades. I did 2 trades today during this market. One was a winner, one was a loser, but with the right risk management, you actually end up in profit. But I also have to say the market today was, of course, difficult. We had very important news at 2:30 or 8:30 Eastern Time. The inflation numbers, and that had a reaction to the market, a strong one. And then, of course, you should know it at it was, I think, 2 p.m. Eastern Time, the Federal Reserve meeting or decision for the interest rates. They were unchanged, and these days are basically very tricky to trade, and all the common I would say support and resistance lines are sometimes not working. So do not wonder if you really make your trading plan for the day, and if your zones don't work, it has something to do with the news and with the interest rate decision. Now I am using here the trade replay mode. It's a really interesting thing to actually learn, and to learn trading, review trading, and actually getting used to the Bookmap platform. So I'm actually starting this this stream here, this replay. Then resume. So now I'm increasing the replay speed a little bit, that we can actually go in 1 hour, maybe during the whole trading day, and to see what we actually what the market did and what trades I did, and how we can actually participate from it. Of course, before I actually use TradingView, it's very important to get complete view on the market. If I only have this information right now, for me, basically, I'm lost. I want to know where are interesting support and resistance zones. For this, I'm simply using TradingView, and I'm actually drawing in my support and resistance lines for the day, so I have an understanding of what is going on. The most important tool for me actually in trading is the VWAP, and we can see here this was the news release at 2:30 Central European Time, since I am based in Germany, and it's at 8:30 Eastern Time. So I actually simply add an anchored VWAP here in that zone. The anchored VWAP is a very nice tool for news releases, and I will also show you on Bookmap later how I'm using this in intraday trading. And we can also see that this anchored VWAP basically touched the market here at around just 10 minutes after market opening, and we saw the up move on this side. So now let's go back into Bookmap, and we could see that the market basically is on the upside. I have the anchored VWAP also on my Bookmap chart. Unfortunately, somehow I lost some minutes of the opening recording, like 5 or 6 minutes. So this session VWAP, I call it, from the beginning of the trading day, is not as accurate right now, but actually it won't matter for the later trading trades that I made, and to actually explain what was going on. The setup for this is very simple. Basically, you go to settings, configure add-ons, and you look for the AVWAP tool, and then you simply start. I had the different AVWAPs in. You just choose the right starting point at our time is 3:30 p.m. or 9:30 a.m. Eastern Time, when the market is opening, and you actually add the standard deviations, the first and second one. This is what I am going to use for the basic market understanding. Then, very important for me, I'm using the iceberg order. This is the MBO data bundle. The icebergs orders on the chart, they can give me a good understanding of where are turning points during the market condition. Actually, are we reaching a top or a bottom? Then there are some examples today, later, the second half of the day, that I also want to show you how I actually, or what can I get out of this information. Iceberg orders are not actually a buying or selling signal. Yeah, iceberg order is simply telling us where is the big money going into the market. How are they placing the orders? Iceberg order is nothing else than you see they're getting detected through the order ID. So, and then you only see the top of the iceberg. But behind this iceberg order, there's still a much higher volume. Yeah? So the bank or hedge fund, whoever is placing this iceberg order, doesn't want you to know that they are what the actually big position size should be or is. Otherwise, the position size we could see in the order book, and then sometimes the algorithms will start to go to this liquidity and you will expose yourself. So we get hidden information from the big players. And I'm following this every day. It's giving me really nice overview of what the smart money is doing. Yeah. Again, for me, important, the VWAP, we can see how the market is actually reacting according to the VWAP, and then also how the market is pending between the standard deviations. Also here, example for the iceberg orders, we can see this iceberg order is still open, not filled yet, actually placed at the VWAP price. Here we see, now I have to make a little bit slower because actually that was also a trade that I started to do. If we go into that position here, we see this iceberg order, buy limit iceberg order. It's a buy limit because it's below the actual market price, so it must be a buy limit. This was the second iceberg order that came into the market, and we can see that the limit price was lifted up. This is the blue line, the limit went up, and for me, I wanted to actually place a short trade here. That was also near the day high today. And I wanted to actually place myself before the liquidity, but then I saw that this iceberg order was still being on the upside, so I canceled that order. It was too risky for me, and also the market simply went in the other direction. And then we had this fill of this iceberg order. We can see the limit was lifted up again to actually somebody had to buy somehow quickly. Yeah? So we can see that there is pressure on that side, and I still wanted to short the market again at the high levels. But here also I placed a sell limit order. And then why did I change this limit? Simply because the liquidity was pulled out of the market. So the people did not want to sell at this price anymore, and I lifted my limit order up to the next liquidity zone, which many times actually, if the market is going to this liquidity, the market will touch this zone and we will get a pullback. I have to say, for my trading style, I consider myself a scalper. I'm taking maybe sometimes only 6 to 10 ticks out of the S&P future. Now today I was trading 12 ticks because we have a higher volatility. The volatility index is important for me to see every day where we are right now, to actually decide what sort of stop loss and take profits I can expect. Today I was trading with a stop loss of 6 ticks. I'm trading very small stops, and my take profit 12 ticks, so I have a reward to risk ratio of 2 to 1. That can actually allow me with a win rate of 50% to be profitable. Yeah, that is very important. And then if we continue a little bit, this market, we can see that we have actually a second iceberg order coming in. Here we have the liquidity, a second iceberg was coming in, and I said, okay, maybe the market is going to touch this iceberg order, and we are going to see a pullback back to the standard deviation, for example. This happens many times. Market absorbing liquidity, the iceberg order, then we are seeing a pullback like this. Why is this going to happen? My niche basically is to identify the algorithm, how the algos are working, how are they trading, when are they entering the market. And a trader in a bank or for a hedge fund, they're not trading like us. We are actually very profit orientated, and we want to buy low and sell high, of course. But if you're an institutional trader, and I actually can say I had my own investment company in China, and I used to manage over 100 million US dollars, and we were trading a lot of Hang Seng futures and of course these stock markets. So now how can you actually place an order on a stock where a daily trading volume of 10,000 shares is, but I have to buy like 100,000 shares. So I cannot simply press buy market because then the price would explode. So I must place many small orders, and my traders had to execute them, and they were actually rewarded through their execution price. And to get a definition, if they bought above VWAP price, too much above the VWAP price, they were buying too expensive. If they could manage to buy around VWAP price or below VWAP price for long positions, it was a cheap entry price. And then according to this difference, basically traders are getting paid. So they have a completely different objective. Nowadays, mostly these are not traders anymore. Like I had my team of 30 traders and analysts in China. These are algorithmic trading. So the algo knows if the price is coming back to the VWAP, probably I have to start buying again in small portions. And this is why we can see nice moves up or down, like I call it pullbacks. And these pullbacks I'm going to trade, and this is my niche of how to make money. And that is the logic behind it. And so if I sometimes say that I even go against the trend, it's simply because I assume that algorithms are going to sell their positions and that I get part of the profit. So here in this case, I changed my limit order back to the iceberg order on the same level. And like I said, I expected that we could see another sell-off here. And for me personally, I do not like to buy highs. I also do not like to buy all-time highs. This is for me, I never know where I should place a stop. Since I'm working very tight in my trading with very low risk, I have to find scenarios, trading ideas where I know either the market is turning at that point or not. This is why I can afford to have a very tight stop loss. So now let's see what was going on here again. Market, playing around normally doesn't show any strength anymore, but can increase the speed a little bit of that trade. And soon you can see that actually I got filled. Again, this sign of weakness sometimes, but actually this trade trying to play again around the iceberg order, but now I got filled, and you can see here also that I was quickly out. So I know very fast if I'm on the right side or not. This is a typical example for my trading. Also, we are here near the second standard deviation. Basically a nice short opportunity to expect pullback into this zone to my take profit, and I would be out of the market. But if the market simply is breaking through the liquidity, I do not have to wait and place my stop a lot higher. Just above the liquidity, either the market is turning around or not. So I'm getting very quick answer of my trading ideas. So now we resume here, and the market continue going up. Here. And when I actually miss a sort of opportunity, we will see this very soon, and the market is making this temporary high. Actually, I could see my idea was correct, that actually we saw the highs here, but it doesn't matter. You actually have to make money. Now it's important thing coming in. We can see that we have this pullback, and this is exactly what I am looking for. This is the sell-off, small sell-off. And if I see something like this, I know, okay, this is the move that I want, and the market is going to the standard deviation, and I would take my profit. Now, since I missed this move, and this is an indication of weakness for me, I don't know where I should enter the market. For this, I'm actually using the anchored VWAP, and I'm just using the high point here. And basically with a right click, create anchored VWAP here. This is what I'm doing. So I assume my idea is the upwards move is at an end. And now I believe that the algorithms also want to enter the market on the short side. But where to enter? So this is basically, I'm waiting that the market is returning to this anchored VWAP to actually jump on this short move. Then I'm trading in this trend direction. And let's see how this is going to work out. No, I must go here, not too fast. Assume. We can see the market is moving away, and I am actually already placing my sell limit order here. And now I have to work manually a little bit. I have to actually move the limit order always one tick below the VWAP price. That's my manual work that I have to do. There is also a function where you can actually try to automate this trading, but believe me, don't do that. There are a lot of crazy results, because if the program, for example, wants to sell here, then you have to know, okay, with each time the market ticks on this VWAP, you're placing an order. Happened to me, then you're short with 20 lots at a time. So you have to put a lot of new filter function into that trading. And the algo or the program also doesn't know, should I buy or should I sell? So you also have to put a lot of consideration into this to not making mistakes. But in this case, for me, I really enjoy the bookmap function. Then I have bookmap here, and I can actually always move my limit order very quickly. Just click it with the mouse and pull it a little bit lower. And we can see now, we see this move again. Selling pressure is coming in, but I do not have the ability to actually enter the market here. And again, you can see, what am I doing? I'm simply lowering my sell limit order. And then basically this was also annoying. The market was touching my limit order a couple times, and I did not get a fill. Then also a couple trades later, couple moves later, I got my fill here, my sell limit order. And again, the idea is that the algorithms are going to sell the market, and that we can actually see lower prices. So I'm going with the trend. Now let's see how this trade was developing. I was really at this time a little bit lucky. One tick before my stop, actually the market did not hit my stop loss. It's like this, and this is before I was using 5 ticks stop loss, and that was simply not enough. Many times the market went like 5 ticks above the VWAP line. And so I increased it to 6 ticks. And this is working fine right now. And we can see market started to move around, and what happened? Market went on the downside, and I actually got my take profit here, and I'm happy. And then you are from minus, you're plus $150. I'm trading this a lot through prop firm accounts right now. For example, Apex or Top Step Trader, and with Apex you can perfectly trade through Bookmap with a connection. And you can see this selling pressure is coming, and I take my profit, and I'm out of the game. Should I actually continue this trend? I was thinking about this for a long time. Sometimes if we have a high volatility, I probably would enter the market with 3 lots, 3 contracts, for example. I would take out my first lot, for example, after 12 ticks, and let the last lot actually run to get sometimes more out of my trade. But this really depends on the season and the volatility of the market. Right now, for me, the best results is simply all in and all out at the same time. So if I basically only, if I trade 3 contracts, I'm selling 2 contracts here. And then what should I do with my stop loss? I have to basically put it break even, or 1 tick above break even. Then if the market is making a pullback back to my stop loss, I actually only realize the profit of two lots, but I'm risking always 3 lots of loss. So for me, statistically, right now it was better to simply all in and all out. But this can change in trendy markets or in more definitely markets that are volatile. And right now, our volatility, if we look at it here on TradingView, for example, volatility index is at 12. This is I really have to think about long time since we had this low volatility. It's a long time ago, almost near an all-time low. And that makes trading then not complicated, but you have to put this into consideration. Where to place your stop loss, and where to place your take profits to make it reasonable. So let's see what the market continued doing. And we can see this line actually is, for me, now very important because we are on the downside. And every time, basically, if the market is going back to this zone, I am trying to sell. And now let's see what is going to happen. And I'm trying to trade this in this. I have to make it a little bit slower, otherwise I cannot follow it. So I place with the right mouse click. Let's say take 2 with the right mouse click, send order. I'm doing this way, and now probably waiting what is going to happen here. Yeah? We see also, sometimes we can see that liquidity will come at this VWAP range, and then you're simply waiting. Of course, if you have now normal market conditions, yeah, like one, it's moving like this. So you can easily move your stop loss, one tick lower. We can see liquidity is popping up around the VWAP. So this is always a confirmation for me that something is going to happen here. Now we continue speed a little bit. And we see more and more liquidity is coming up at this level. Waiting. Make it maybe one tick lower, below the liquidity. Okay, we did, the market touched here. We could see touched our limit order, but we didn't get a fill. Now we got a fill. We are simply waiting. And take profit. Again, same game, again, placing order. Always around VWAP. And we can see there is actually always attention around this magic line. Yeah, like I said, it's no magic. It's simply algorithmic trading. And we try to find our niche in it. Here, sometimes I have to say something. I saw this before. Market hit this low and we saw huge stack of liquidity pulling in for a short time. Yeah, this is basically sometimes someone really wanted to go into the market here, and if you cannot get the fill, probably they take out the orders and then probably buy market. Yeah, that is sometimes we can see a stronger up move, but most likely simply follow this easy method in, okay, and out. Not always it's working. Yeah, this was a sort of sign for danger for me here. But we are simply going through this sort of trading style. And again, if you make 2 trades, if you're one winner and one loser, you make money. So again, what is important for me to show this again, I want to see sort of, I call it always a black hole because I am using the dark mode. And if we see that the market is moving away from this VWAP, we are seeing here this black zone, or here. If we can see this, then the VWAP becomes of interest for me. If we have this swings around the VWAP, I do not pay too much attention to it. Right now, what I want to see is either the market makes a new low, that we actually build up a larger black zone like this, or the market is breaking through, actually taking out this high, and then it's going to make a retest to this VWAP zone. Yeah. Let's continue. Now simply waiting what is going to happen. Are we actually changing the trend now and breaking through, or are we simply making a new low and can place a new order here? I want to see that we maybe take out this low, getting into this zone to place a new order. Okay, now we make a low, and I'm simply adding again my order at the VWAP. this replay mode is great for you to learn trading and to basically get confidence in your trading strategy, in your system, yeah. And even me, many times I'm struggling. Should I take this VWAP trade now, yes or no? Or is it already too frequently? Yeah, we are all fighting with this. Basically, sometimes don't think too much. Simply trade your system and follow this idea. We are on the low side. Still in a downwards trend. That is the idea, the big picture. And each time we are going back to VWAP, we are trying to trade it. And again, market is turning away from the VWAP, and I still be patient. I do not get FOMO or whatever. Try to catch on this trade, because then if I enter here, for example, if I want to take the short trade, where should I enter? If I go short here, a reasonable stop loss were somewhere around here or even above the VWAP. It would be too much for me. So I'm simply be patient. I know market has weakness, and expecting that the market will simply go back to this VWAP price, because if the market is going back, the algo will think, okay, that's a fair price to trade. Yeah. And still, yeah, again, didn't get a fill. That's sometimes unlucky. This is really happening. Yeah. Market is touching your order, but you do not get a fill. But that is real trading. You know, it's sometimes you are not getting execution, but I'm also not willing to put my stop or my entrance at a lower level. I do not want, since I only want to risk this 6 ticks. If I enter too early, I will not have the leeway that my stop loss actually needs to find a suitable stop loss area. Again, execution. Now let's see what's going to happen. Okay, took profit again, and these are the moves that I expect. I do not expect to actually catch more on this trade, because this is what is the power of the algo, according to my philosophy. It's not really that we have now a change of trend. Sometimes it's like this, but many times it's also not like this. So this is the basic pullback that I can expect, that algorithms are trying to put their sell orders in at that direction. And they do not continue selling, because simply if you go short in this direction at this price level, it's already getting too expensive for your short. So you wait again for higher levels to actually find an entry point. And again, same game, placing order there and simply wait for a return to this price level and to get our next chance. And you can use this way basically in a sideways market or in a trend. That is basically there's no big difference. In a sideways market, I really like to trade the standard deviations. They're good entry points. But right now, the assumption is still that the market is looking for lower levels. Caesar, such a stress-free way of trading. Yeah, sometimes you really do not put too much thinking and indicators and whatsoever into this trading. I always try to make it as simple as possible. I'm a lazy person, I'm telling you the truth, in trading. Yeah, and too many indicators, too many charts, too many lines, just making the life difficult for me. And here you see also why I like to trade with Bookmap. I see the lines, I can easily click on it, put my limit order lower. I have my brackets here. I could also use the multi-bracket add-on if I want to have actually certain take profit levels, not only one, maybe 2 or 3. Then I have another tool for that. And again here, market did not go exactly to this VWAP. Actually, market went to the session VWAP, and we can see the sales pressure coming again. So someone is dumping, exactly if we dive in, dumping positions here. This line of pearls, I'm calling it here, Here, this is like, for me, some algos are really putting pressure on the market. And then they're going to stop, because then it's getting too, you're not getting a fair price anymore. Now again, we are simply waiting. Can increase the speed a little bit. And again, market is in. Okay, and here it didn't work. Happens. You know, some loading new data, maybe takes a second. Bruce is also here, yeah. But if you have questions, you can ask them here in the Discord channel or in Bookmap.
Yeah, please feel free. I've got some questions for you as well, Robert, when you have a moment.
Yes, basically just start asking, yeah. Then...
Okay. Everybody, please get your questions in for Robert. We've got a few in here. Such a stress-free way of trading. Absolutely, Caesar. I mean, like, Robert's a seasoned veteran, and like he said, he doesn't have FOMO. He doesn't have these issues. He's looking for something very simple, and it's not complex, and it's studied, and it's all kind of set up for him, and he just trades. That's it. Let's see. Dianasaur is asking about, do you consider those sweeps? And I think that's about those selling, that dumping that you saw earlier.
Exactly. These are small, very small market sweeps, but now this is why I stopped also this. Basically, here is a nice market sweep, yeah. And you can see the sell-off, and the market immediately is going back to this breakout level. So really somebody just dumped it. Now what time is it? It's 7:30 US time. Actually, it's before the Fed decision, so we also have to put this into consideration. And later, after 2 p.m. or 8 p.m. our time, actually the interest rate decision came into play, and I also want to show you some ways how to trade this. But here, this is basically a market sweep. Market going down, selling off, and immediately coming back. So somebody dumped their positions. Basically, you see a sort of V shape, yeah. And again, sometimes here, that is also what I wanted to show, how I can actually see the, that's a very nice example for the iceberg orders. I think we could also go back a little bit to see this, a couple seconds back. So now I'm putting it a little bit slower, and I want that you pay attention to the iceberg orders and how I actually interpret, or what they can actually telling me, and that is a very valuable information for me. Okay, still loading. Second. How many times will you take the trade of the bounces of VWAP? Do you take every time it touches the VWAP? No, Danny, definitely not. I'm not sitting 8 or 9 or 8 hours in front of the computer. Basically, I'm doing 2 or 3 trades. And if I'm trading prop firm accounts, I actually have a strict profit level. Let's say on a 50K account with Apex, my daily profit target is like $400 to $600, and then I stop trading for this account. Maybe I switch to another challenge or a funded account, and I'm trying to. The important thing for prop firms is consistency. Yeah, if you make in one day like $2,000, but in the other trading days only like $100 each day, you will not receive a payout. They want from you that you trade every day the same. And this is what I try on multiple accounts. Every time I make like $500, close this account, next one. And then I'm trading this. So, and normally if I trade like 2 or 3 trades, I can reach this goal easily. And then I also stop trading, taking care of my community and doing other things. Yeah. And also a lot of research. The way how I trade right now looks very simple, but the research behind it, how the algorithms are working, yeah, this takes a lot of reading, research, and talking to mathematicians and programmers, talking to people from the industry to get actually the insight behind the VWAP. And then it brings everything down to this simple line, yeah, and when to add the anchored VWAP. So I try to bring the complex information into a very easy way for me. Now let's see here again what we can see, what I want to pay attention to. A little bit faster. We can see that certain iceberg orders are coming into play. Now we have this blue line, yeah, and for me, as more blue lines as I see, I know, okay, big money is placing their orders right now. This blue line is coming up. So somehow they want to buy at this level. Liquidity also popping in. Again, more and more iceberg orders. So I assume that we are actually at an end of this downtrend. And we can see new iceberg orders showing in, starting to buy. And most likely, this is an indication for me that the market will go back into the normal distribution, and the normal or fair price value is around VWAP price. So they're getting absorbed. And then when I see this blue lines, yeah, I like it. If there is more blue lines I can see in a short time at the bottom, I know that probably that's the end of the move. And we can also see that here the buy pressure is coming in. The market is slowly moving into a new direction. But again, we are now just shortly before a news release. Yeah, you can see this many times before the news release, and in a couple minutes we have the rate decision. And I do not trade these news because with prop firm accounts it's forbidden mostly. But for me, I simply want to see what is the reaction and then try to find my niche. Now let's see. I have to make it a little bit slow. Being there. At exactly 8 o'clock, I'm going to add an anchored VWAP. I'm calling it the event VWAP. And this is the one I'm going to use for trading decisions. Right now, I will place some trades, yeah, but I wouldn't trade it with a 6 ticks stop loss. And you can see very shortly the reason, because now the market is getting bumpy. So the sell-off. And also, that is very important. You can trade this with your own account. What we can see here is a mail function of the order book, because the market simply is jumping over emptiness in that order book. Yeah, this has to be recovered. These lost ticks somehow must be restored. And then we have this big move, like 20 points on the downside, and in 90% of the time, the market will come back to the breakout level. But for me, I have nothing to trade here right now, but I'm simply going to add an anchored VWAP, create anchored VWAP here. And I let the market shake out, yeah, I call it. The order book has to get filled a little bit. And again, the idea behind this, or the logic, there are many big funds, they are actually trading, or they have to build up their positions according to news release, yeah, macroeconomic news. And so they cannot enter. Let's assume they want to sell, they go short. And they go with their first lot contracts short. This is why we see this reaction. But this is maybe only 1/10 of the actual position size that they want to trade. And then they every time have to actually enter around VWAP for any reason to get a fair price for the executions. And again, we can see market went down and again went straight up to basically fix the imbalances in the order book. And again, now we can see VWAP, actually the market shaking around the VWAP. This is the VWAP that I draw for myself. And again, here the market went back to the breakout level to fix the order book. This is very common. This actually you can use as a trading technique. I did this with my own account. Before news release, I place a buy limit order like 20 points below the price or 20 points above the price, a sell limit order, and I simply let the market put me into the trade somehow, and then I basically know that the market will return to sender and my take profit is around this level. But like I said, it's sort of risky, these trades. You really must calculate that the market still can move another 20 or 30 points against you in a couple of seconds. That is all possible, but with a 90% probability, the market will return to sender. You can do this with a very small lot size in comparison to your account size and have maybe once or twice each month a trade like this. So again, the market was moving around VWAP. That was the VWAP that I actually entered myself. But you can see they're both coming together now. And here you do not have any trading decisions right now. What we want to see is the black hole. And this is for me the black hole here in this chart. Of course, if you have a white background, it's a white black hole, a white hole. And then the market is returning to VWAP, and that would be a good trade entry for me to actually be part of that news event. And again, market touched VWAP, around VWAP price, and the market is moving up. But with stop loss of 6 ticks is very tight because the market is so volatile during these trading minutes. And normally I do not like to trade these sessions with my small stop loss. So still, if you have questions, feel free to ask. Again, here the VWAP was touched. This is a sort of reference point.
Yeah, Robert, I mean, you kind of mentioned this about the studying and analyzing and coming up with your trading plan. Because you're making it look so simple here, and it is. However, there's a lot behind it.
Correct.
In fact, there's decades of experience. And trading like $100 million account experience. But I'm wondering like how you ended up with these, for at least for the S&P, these stop loss and take profit sizes.
Actually, an easy way for me. I can see it very easily, the swings. How big are the swings around the VWAP? This is what I can use as a reference point. But if you want to get a clear picture, simply use the ATR, average true range. If you trade in a 1 minute chart, here we go to indicators, average true range, and you can see the volatility in that time frame. We can see a very high volatility of 5 points. So if you use the take profit of 12 ticks, you have like 3 points, and you're basically very comfortable in this range. You could maybe even take a little bit more. So I know that it's easily during this trading session to have 4 to 5 points, which is like 16 to 20 ticks take profit. With the 12 ticks take profit, I'm on the safe side. And if I have during other market conditions or market times, we sometimes have to take less, like only 6 ticks or 8 ticks take profit. Basically, if you trade during pre-session time for Europeans, and I only use 6 ticks take profit, 6 to 7, and I can use the average true range as an indicator for my take profit. For my stop loss, for me, it's very simple. Either the market actually is turning at the VWAP or not. Most likely we can see moves like 5 to 6 ticks around or below the VWAP to actually, that's the buying pressure is coming into the market. But I do not need a 20 tick stop loss here. It doesn't make sense. Mostly the market, like here, is just touching and creating a pullback. Touching, creating the pullback. So there's no need to wait. I am either getting this pullback immediately or not. So I don't need to risk a lot. These are really very precise turning points at the VWAP to place your trades, either you're on the right side or you're not. So if I immediately get my answer that I'm wrong, well, I don't have to risk too much. Yeah, I do not need to wait. Of course, during certain times of volatility, we have to increase. We have to watch what is the range around this VWAP. But right now, it's like 5 ticks also here. It's the standard deviation. The market is touching the standard deviation, but not really going above. And we're getting the pullback back to the VWAP. That's basically my philosophy behind it. I watched it over hundreds or thousands of hours, well, days, and either the market is just touching the VWAP and returning, or it's going through. So that's it.
Yeah. So then how long, like, did it take you to adjust from the 5 to 6 point or tick stop loss?
Actually, every day I'm watching the volatility index. Right now we are at 12. That is very low. If we have now a jump of 20 or 30% in that VIX, which can happen, we can already see that the market is becoming more choppy. There are certain indications. One for me is the order book. Are we actually 2 digits around the price level or 3 digits? If we have 3 digits, like 150 or 200 lots, the market is very slow. So I can work with a tight stop loss. It's not choppy. But if, like now, we have only 2 digits here, like 50, 40 contracts, we know that the market is quite choppy. So then I'm switching from 5 to 6 to 7 or to 8 ticks. And also through observing, basically the first 30 minutes of the trading day, I am watching how the prices are reacting to the VWAP today, to the standard deviations and to the session VWAP. And according to this, I am getting a feeling if I'm working well with 5 ticks or if I have to increase it a little bit to 6. Then I'm really basically watching here at the VWAP and counting how many ticks the market goes above the VWAP price. Right now here it was 1 tick. Yeah. And also here, okay, we see the market actually reacted at the VWAP, but there was no really selling pressure and the market broke through. So with my 5 ticks, I'm fine. But really, like I'm doing it right now, for example, in this case, these are the market sweeps, for example. My entry point would be basically here, and 1, 2, 3, 4, 5, 6. Yeah, 6 ticks I would hit my my stop loss. But this is how I'm counting it. And this is from day to day different. Sometimes it's only like 2 or 3 ticks, so I know I'm very comfortable if I'm using 5 tick stop loss. Or of course, now we know Fed decision. I know that 5 ticks is basically too little. I need 6, 7, or 8 ticks stop loss. Or basically, if I see that the market is choppy like this, I do not trade. I simply turn off the computer and going to the beach, doing something else. I do not have to trade during these situations. Also, again, next week is triple witch week. Yeah, futures and option indices are going to expire. This is basically a week where I do not recommend to trade, because we are going to see the liquidity is getting pulled out of the June contract and is rolled over to the September contract. So we are going to see a very choppy market, and also our support and resistance zones basically are not really going to hold, because there are completely different intentions from the institutional side. Some banks or hedge funds, they simply have to sell their contracts and to switch them to the September contract. So they do not care about any price levels. They simply have to do it, or they have to hedge their options or sell their options or whatever. So there is a lot of activity going on next week, which can lead. And I educated so many traders. Most of them, 99%, they're actually crashing their accounts during that week. So simply do not even look at the markets and to do something else. Yeah, that's from my experience. And then I do not have to trade every day. Yeah, there is no point in it. Trade when you are sure for yourself, if you're feeling well. Yeah, And especially if you have things like family problems or problems in your relationship or with your children, or you are sick, do not trade, because these, we're always calling it the fuck up days, are very high. The probability that you screw up your account. And then if you have 2 or 3 trades profitable, basically my recommendation is stop trading, do something else for the day. I mean, this is why we are traders, actually. Yeah, we can arrange our day like we want. And if I reach my goal, my personal goal, and I'm feeling very well, then I stop trading for the day. Well, today I stopped trading with $150 on that account, on the prop firm account, but it was intentionally because I knew we are going to have this choppy market and the federal rates interest decision. So I do not want to risk more. Then I cannot get more from the market. So you have to be, I would say, grateful to that opportunity, what you can take out of the market every day. With a new start. Sometimes it's more. Sometimes I'm really having very good days where you can make a lot of money. But of course, this is not the daily business. The daily business is simply to pay your bills, to reach your personal profit goal, and risk as less as possible. And always think about tomorrow. I think Michael Belafort said it very well. We're trading to trade actually for another day. Yeah, always think about tomorrow and not about don't get your margin call today.
Yeah, that's a funny thing. I mean, yeah, it's a very different way of looking at things, because you know, you show up to work at a regular job, you'll get paid,
Yeah.
but not in this job.
No, in this job, actually, the more you trade, the more you lose.
Exactly.
As long as you sit in front of the computer and watching the charts, well, as more opportunities you will get and as more trades you're actually going to, the more risk you take and you're going to lose. Yeah, you cannot win each day. And this you really have to learn and to understand that every day take these 2 or 3 trades out of the market, be happy, be confident, and tomorrow's another day. You
But
cannot win every day and you cannot lose every day. That's also same.
yeah, yeah. But Robert, I mean, you're a veteran. You've been trading a long time, but it took you a while to come to that conclusion. What would you recommend for other people just starting off and trying to, because they don't have that knowledge yet. They don't have that
Yeah.
experience.
Basically, I was very lucky. When I was 17, I met 2 of my first mentors. With them, I set up my first investment company in Germany as I was 17, and they were actually teaching me every day how to trade. And they were my mentors and my masters in this way. For me, find a person or a community that actually is really taking care of the seriousness and also of the information. Do not look at the traders who are posting big profits and so on. Well, you can forget about them. Find a suitable group of traders with whom you can actually exchange your experience, who are honest, and start to learn from them, to get this feedback. Because trading can be a very, very lonely business. And I know it from myself. If you sit every day in front of the computer, then you cannot, you're stuck in a very narrow world of your own, and you cannot even talk to other people. If you try to tell someone what you're doing, I'm a day trader, I'm looking at this Bookmap, they think it's completely nuts, So you do not even have anyone to talk to. And even if you make losses, well, you have to keep it to yourself. If you tell your wife, I lost 10 grand today in day trading, she will say you are very stupid. Why are you doing this? But it's part of the business. So you have to find people to whom you can talk, exchange your ideas, your perspective, who can give you honest feedback. And that is what you should look for to find these sort of communities. There are good people outside, who are giving you valuable information, who are honest, and actually who can bring you on a next level. And I really have to say, I found with Bookmap one of the best communities in this way, how to talk to people about trading and getting honest and qualitative feedback knowledge a lot, and that even also for free. You know, you do not even have to pay to be in a Bookmap Academy where you can learn a lot. It just depends on you, and you get your feedback. Use these tools and platforms. I never had this at the end of I started trading 1995, 96, and I never had this. Yeah, I was very happy to find these two people who were actually teaching me, with whom I could talk about this. But that was very, lonely business, or is still a lonely business. And that I would recommend. Try to find a community or mentor who you like, who shares the same values, and a community which has good values, and basically it doesn't have to cost too much. I do not recommend to pay like $10,000 or $20,000 for some sort of coaching education, because most of the knowledge is for free available. See Bookmap channel, or buy very good books. They're not expensive, where you get the basic knowledge. Only depends on you.
Yeah. Well put. Yeah, that's exactly what our goal is, or try to do at the Bookmap Academy, and offer that kind of support and resource, some coaching and mentoring. But really, it's the community that's going to help each other the most.
Exactly. I mean, you cannot talk to anyone about this, not about your friends. Nobody's going to understand, and well, you have to fight you have to fight this war within yourself. Yeah, that is the this is the thing.
Yeah. So, Robert, I don't see any other questions. And you've gone for just over an hour now. We tried to keep these down to about an hour, but if there's anything more that you want to go over, then
actually, right now there was a question: how many candles do you set your ATR at? No candles. Basically, I'm just having the ATR and using the time frame where I am trading. Basically, it's like a 1 minute chart. So I'm simply looking at the volatility ranges. And if I trade during a pre-session or regular trading hours, then I look at this number to see where I can put my take profit and my stop loss.
Oh, I think the question was like, is it like I think the default is like 14 period or so.
Oh, yeah, okay. Yeah, this can be, I think 14.
So you're just using the default. So
exactly.
Yeah.
Something else doesn't make much sense for me. Keeping it simple.
Keep it simple.
I mean, if you use 14 or 20, I do not see the big difference. And I also, if I see like 5 points, or if I see 5.2 points, it doesn't make a difference for me. I know it's 5, so if I have a take profit of like 3 points, I'm basically very close into my range. It's working here.
Yeah, love it. All right. Yeah, and I really like the so simple with the trade management. First off, you know exactly what you're doing with your stops and your take profits based on the instrument. So this is not going to work. You're going to have to redo that. Someone, if they're a NASDAQ trader, they'll have to rethink it, of course. But the strategy is the same.
Strategy is the same for every market. Stocks, gold, oil, crude oil, also working very well in crude oil. It's a volatile market. Many like to trade the NASDAQ. You just have to adjust your take profit and your stop loss. Basically, these two numbers, TP and SL, and then you can trade every market in this this strategy.
Yeah, and the stress-free, just moving your following the order down along the anchored VWAP there. Just very, very simple.
Exactly. Just wait for events to enter one, or simply for highs and lows, daily high, daily low. Just enter VWAP and these levels and try to follow these levels, and try to place your trade. There are no limitations to that.
Yeah, excellent. Let me double check if there's any more questions here. Okay, so you answered the 50K on the account sizing. Excellent.
Exactly. That is less risk to reward ratio of 2,500 to 3,000 is, for me, I think, reasonable.
Yeah. All right, excellent. So, yeah. I mean, if there's anything more, Robert, we can go over it.
On my side, not. No, I'm basically I have. Oh yeah, I told you what I wanted to tell you. That was my script.
Well, and thank you so much for
Yeah,
staying late. I know it's quite late in Germany. Thank you so much for this. It's really helpful for everybody
yeah,
about using the trading tools and functionality right within Bookmap, and how easy it is to match this with your strategy as you have.
exactly. And Bookmap is a perfect tool. You can enter your anchored VWAP anywhere. Simply place your limit order. Very convenient, easy. Well, so almost too easy.
All right. Well, thank you, everybody. Thank you, Robert.
Yeah,
And
thank you too.
looking forward to doing more events with you in the future.
Yes, thank you. So then I bye bye, and well, see you in the community. I see you tomorrow again for the next live stream.
Excellent. Thank you again.
Bye.
Bye bye.